Good afternoon traders, and welcome to today's daily market review. It is Thursday the 9th of July, and today we're going to be looking at the FTSE 100 stock SABMILLER. Now SABMILLER has been in a very strong uptrend from the 24th of October 2008 right up until the 19th of September 2014. Now there have been very limited opportunities to get in on the uptrend. We've had one significant correction which took place on the 17th of May down to the 31st of January, and we now have a Gartley harmonic pattern which has developed. So we're going to drop down to our daily time frame so we can have a look at the harmonic pattern in a little bit more detail. So on the daily time frame, we've applied our Fibonacci price and time analysis to the market. We have two zones which have developed at 33.04 to 32.95, and our second zone at 32.66 to 32.48. Now the CD leg of the harmonic pattern has entered into our first and second zone and has found some significant support. In terms of our time window, we have a time histogram which basically calculates the high probability time windows for reversals. Okay, so if we look at the dates, we can see that from Monday the 6th of July right up until the 20th of July, we have a large clustering of high probability times for a reversal. On top of this, we also have a bullish reversal in the oversold zone on the indicator. So from here we're going to drop down to our entry time frame, and we're going to be looking for some kind of entry trigger to get us into this trade. So we're going to drop down to the 60-minute time frame, and what we've done here is we've isolated the CD leg of the Gartley pattern, and also we've applied our Elliott wave analysis to the price action. Okay, so what we can see here is if we've had 5 waves to the downside, which for those of you who study impulse waves will know, impulse waves will generally unfold in 5 waves. If we look closely at wave 4 and zoom in, we can also see that we have 5 waves to the downside. So this should indicate that the entire CD leg is complete. Okay, so if we go back to the daily time frame, we can see that we had a low into our second zone of 32.66 at 32.48, and the low was at 32.60. We've had a cross of our moving averages. So in terms of an entry, we would want to take out a swing high, and the wave 4 of 5 had a high of 33.97. So in terms of our triggers, we generally look at a cross of 2 moving averages and also the violation of a swing high. So we've already had the moving average cross. We have the market trading at 33.70, so 10 points off of the low from the zone. So for a high probability trade, we want to see the market trade through the wave 4 of 5 high of 33.97.